The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Thanks for joining us today. And I'm sure you guys know the outcomes of the games in the NCAA tournament. My home state didn't fare that well. Duke's still in it, but Carolina State just got chopped off. Wisconsin's in it. That's good. I'm a big fan of the Wisconsin team, and I know some guys out there listening to this are Wisconsin Badgers, so hats off. They had a great, good coach team. So is Izzo, Michigan State. He seems to always get in there. It's just his odds are amazing. He's been to the Final Four, 7 times? Amazing. And Kentucky almost got beat. Oh, almost. That was nerve-wracking. All right. Let's take a look at the S&Ps. And I want to first bring in, this is something we're just paying attention to. I want to just kind of peruse a little bit through. I hope you guys are seeing my screen right now. Peruse a little bit through, some of the breadths out here. I want to start out with the Shanghai. I know you guys have probably been looking at some of the news out there that the first tick down in the Chinese economy, again, they learned from us. Hey, we're going to rush to lower rates and buy bonds and devalue our currency as quickly as humanly possible. Well, this is what happens to the stock markets, as you know, when somebody takes that attitude. And if you look at these breadth statistics up top, that's nuts. So what we're going to do before we get into the S&Ps is just as a basic primer in insanity that we just talked about, we're going to take a look at the Shanghai, and we're going to look at when we really started looking at this thing on the launching pad. That was back around if you were watching the show or looking at some of the videos I was doing, we started getting our head above water back around, 2150. And I remember when it happened, I was like, oh God, here we go. First time the Shanghai's done that since 2012, right? So when we got some legs, this is the weekly, got the weekly close above, and then we found, some support along the way. I remember when that day happened. That was back in the fall in October, and we talked about, okay, we're in an uptrend. We got to the maximum buy point, the maximum support area. This thing has just been on fire. I don't have to tell you that, but it's really been something. Looking at this breadth indicator right here, and also looking at the profiles, the regulation of this trade up, and I'm going to pull this up too. This is our daily. We're going to go back here, and here's that 2150 area way back then. We haven't had even a lot of times, to really look at this with any suspect eyes on the short side. We did. That was when we kind of touched down and reached the bottom of the box on the weekly. There's that October 27th date right there. We had some intermediate breakdowns, but these have been few and far between. And this daily chart has really regulated the weekly very well. I mean, we had a little bit of a noise down there then, and that was okay to sit on the sidelines and pick it back up later. But here's where we're at now. And it's just a really good example of, especially this latest move up is, good Lord, stand out of the way of a moving freight train when it comes to these central banks and governments that, say they're going to do something. Just I don't think you need to. This is, the financial mathematics in this day's marketplace are kind of unsure, and this is a great example of that. And a lot of historical relationships you can kind of throw out the window when a big government or bank or some MO comes on board and says they're going to do something, I mean, it's just, you gotta buy the offer at that point, if you know what I mean, or sit on the bid. All right, here we go. Let's get into the S&Ps, and we're going to pull up our breadth again. We're going to go into this, and we're going to notice as we wait for this to populate. And let me just kill these. Let's get a clean screen here. All right. Michael, is there any reason? Oh, there we go. Okay, so we had some cracks in the armor last week before we started selling off, and just to give a little bit of a history lesson, we were able to pass intraday around this 68, 63 area. That's weekly infra highs, daily infra highs. And that was because our daily breadth started rolling over, and it wasn't probably the ripest opportunity. We got down in this area, weeklies were still positive. We've actually retested the top of this profile. 68.75 is the top of the box, and 2069 we hit this morning and backed off. So what does this all mean? Again, we started seeing the cracks in the armor that day, 324. It wasn't full on dailies rolling over until we got down into here. This was a little bit of a battle point, I must admit, but the breadth and the couple of things we were looking at were not exactly the ripest opportunity at that stage. This one was kind of Custer's last stand, so we thought about picking some battles here. But what do we do now? So we're basically continuing to stay in somewhat of a range. 2069. We got this 2063 weekly for high, and then you got this 2038 sitting down below. So what do you do with this? Considering that the breadth is still rolled over, and here's our 240s. Not a lot of leverage here. You got that 2072 sitting up top, but here's the 63 area. You really, I hate to sound like a broken record sometimes, but I think this is somewhat of a sit tight situation. I don't exactly feel comfortable going short or long here, but if you put a gun to my head, I'd actually feel a little bit better going short than long. I don't think it's the highest probability situation, but you can clearly put stops above 2069 in this situation. And I'm reading Steve Rose's comments. You got 3 of the 4 Final Fours. That's pretty. Let's see, Wisconsin, Kentucky, Duke. Okay, that was pretty. That was high odds. And then Michigan State. I didn't realize you were from Detroit. Wow. Yeah, you should have picked those guys. Shame on you. That's what you get. That's exactly what you get. Here we go. All right, so that's the situation on the S&Ps. I'm a little bit more leaning towards the shorts and the longs, but I don't see a lot of leverage here. We kind of come off this 2068 stops above there on the short side. So here we go. Keep continuing to go down the list. Let's just look at the major components before we get going into some other things. I've got a lot of stocks picked out today. Talked about this. Talked about the notes, throwing out there another profile. Friday we got one. We talked about this leverage point, 128.11. That's kind of where I'm putting my stops below. I still think, it's turned the wrench the same way. It seems like they've pulled out the rhetoric again to follow suit, and that's kind of the way I'm looking at the notes right now. Let's take a look at the bonds. Here we go. Got that nice bounce of 162.20. So what do you do now? I think the leverage is towards the north side on this still, and stops below 162.20, which are a little bit lower than the 10-year as far as a risk appetite situation. Let's take a look at gold really quick. This was something, the 1200 mark was kind of the fence, if you will, from before. We got up there, we kind of crowded it, blew a gasket, came back. I was a little, we were looking at this relative to the dollar on Friday, and we were looking at the dollar, and let me just go back to that in a second. We were looking at the dollar. Where's the dollar? There's the dollar. we were looking at the dollar, and we were looking at it coming down into this weekly unfair high around 96.5, let's just call it. And we talked about a possible bounce there, and we actually talked about maybe that wouldn't be the best case scenario to start buying gold and just kind of a wait and see situation. So let's go back to gold. And the dollar's rallied just a little bit, since Friday. But let's take a look at gold relative to what we just said. So now we're kind of just dangling down here, and the dollar seemingly has caught a bid. Here's the 240s on gold, and we're breaking down below those two. So what do? I think the longs really have to now. We got a little bit of a bounce off 1185, 1186 already. Let me just blow that up for you so you can see it clearly. As you can see, I mean, we did kind of, what is that, 1185, and we got as high last 4 hours 1190. So that bounce happened, failed miserably, stops down below 1185, and we may go back and retest that. So if you must trade gold, the dollar looks like it could continue a little bit higher. Gold seemingly is not liking that, and 1185, 1186 could be a battle point on the retracement back up, and a former support now resistance with stops above. And I know we've come down pretty hard on gold already, but that's just the way I'm looking at gold. And that is a little bit predicated on the dollar situation. So that's the dollar. And we could blow past that unfair high. I mean, if you're short, you don't like this action. That unfair high is 98.07 on the dollar. Okay. All right. A couple more things we want to cover before we get into the meat of some of the things we're going to talk about today, just to get the landscape here. Let's go into crude really quick. A lot of fundamentally bearish sounding news out there for crude oil, but the fact of the matter is we got a new profile that's appeared. It's a little bit higher. Got a little bit of a lid there, 49.85, 48.85. That's got to get through that for the longs. But you're at a buy point here actually on the daily. So you got 48.03 coupled with 48.85. So we want to clear both of those levels to really get back on the long bandwagon. You've got a little bit of a DMZ down here. But, I like the way this has kind of come down into a support area. You've got the weeklies you've got to overcome now, and that's what I'm looking at on crude oil. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I was going to show you the DAX and the FTSE, but I think eSignal's having some issues right now. I don't know why, with the Eurex, or not the Eurex, but one of their inputs from overseas. Here is the Nikkei. Just want to point out that, you know, the yen's been helping this situation. Here's the weekly on the Nikkei. Not a lot of reasons to get out of this. There's, you know, in my opinion, put stops below 19,314 and just kind of let this thing ride. Again, you got a government intervention. They ought to have a intervention show on governments, like the one on A&E. That's not funny. Anyway, let's take a look at the Japanese yen. So here we go. Here's the daily situation. We did break down a little bit below that 120.4950 barometer. And what do you do now? It looks like we may start having a chance for a new profile to appear. Here's the weekly, appeared last week. My targets above are still above 121 on this thing. And I'm trying to just kind of leave it alone with some stops. Very light position. Trying to hang in there with stops below that 118 area. So that's the way I'm looking at the yen. And here's kind of the short term. We kind of broke out again. So it's a repricing issue for the Nikkei here. Here we go. A couple of the usual suspects. We want to take a look quickly at silver. I forgot about that one. Some of you guys out there looking at this. Here we go. Here's the weekly. We talked about the targets before. 1722 reached a high last week, 1740.41. So that's been met. Gold's getting its head handed to it. And here's the situation on silver. So we got a new profile is probably going to appear. I think when you reach those targets, you just got to sit tight, that 1720, 25 area we just talked about. And, now it's anything goes. Even though we're above profiles on our daily, we're just kind of long term. We're still in this situation. We just pull this up so you can kind of step back from the 30,000 foot view and see that, it's not time to, it's not, it's not time to write home yet. It's not one of those things I don't understand. Here we go. Let's take a look at November beans. We got to cover that. This is one of the things that I personally keep up with. 942.5 still sitting down here. That's my target on it. That's where I'll be looking to take some weight off of the November bean trade. A couple of the usual suspects. I almost want to throw this in there because half the country's in it. Apple. Talked a little bit about this. A trading opportunity, 122.20 into 122.40. That happened last week. Got a nice bounce. And what do we do now? Well, I'm sorry, it happened the week before. Got a nice bounce. And what do you do now? The stock market's a little iffy right now. Sometimes you can't ignore opportunities on Apple when you've got support areas, just sitting in front of you. But I don't know what you want to get out of this Apple trade, but the clarity of what the stock market is going to do or not going to do right now is not really there, in my opinion. So try to trade this bounce. Just put your stops in. We talked about that. That's always a good rule of thumb. And just look at it with a possible jaded eye. That's another one. Jaded. Where did that come from? Jaded. Can somebody look that one up? All right. Another household name we got to talk about is Mr. Softy. Been looking at this one, and we've been looking at this. Got the breakdown, got the retest. And these are all in the profile scanner. If I go in here and I want to pull up a stock, I want to kill that. Let's see. Pull up the S&P 500. As we wait for that to build. So long term, we had the technical damage, and we're not really recovering on Mr. Softy here. But now you're coming back into some inflection points. Again, I think this might have a little bit market relevance. Last week was not a good week for this stock, and we are sitting on these triple lows, and we may just flush just to do it. And that would be in the same vein of, it's okay to be short, not okay to be long on a long-term basis. I'd stay away from this, even though we're at some support. The market, any herky-jerky move down in the market could drive this into madness again. Did I see? No, not madness. Just drive it down. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to take a look at, and by the way, I don't give this out enough. TFNN gets on me all the time about it. Here we go. The numbers to call in, 877-927-6648 and internationally 727-445-1044. If I don't give those numbers out, does that mean that I just want to hear myself talk all the time and not talk to anyone else? I don't think so. I'd love for you to call in. Here we go. Let's take a look at the scanner. They're telling me I do not win a prize. Here we go. And let me get this out of the way. Okay. You know, what's really interesting is, you know, these numbers are going to flip a little bit on the opening, but this is relatively bearish, especially the dailies, the 240s. Again, we're up 10.5 S&Ps pre-market here, and we've been even a little bit higher, I think up 15. Again, a little bit more bearish than bullish on the market, but not a lot to hang on to up here unless you're just going to put stops above 2069. That's the take on the amount of stocks on our intermediate time frame that we need to pay attention to. Let's take a look at the XLF. As you know, this is involved in that financial mathematical unsurety equation, which I was relying on before it had a weekly close 2 weeks ago above this 2450 area, which, how can I say the word suck? It sucked. And then we had a reversal right back down. I was looking at that as it was happening, and a little bit timid to get back in the water on the short side. But I fully believe this is a strong play on the short side. It's just, a lot of good trades, in my opinion, and my experience, have been kind of painful before they became good. And those are always the best ones, You weathered the storm. Maybe you got stopped out a couple of times, and then cha-ching, you're right, as rain. And this one, I think it's got a lot more downside to it. But again, put your stops in right now. Where do you put those stops in? I think you just look at this 2450 general area and just leave it alone. Sometimes in the old days, I remember just sitting in the board of trade, and the more I watched the screen, the more I screwed up the position. This is one of the things where I'm just trying to walk away, not look at it too often, and just let it unwind. That's, that is very true. The longer you look at this screen, if you got a profitable position on, the more you'll screw it up sometimes. Sometimes it's just good to walk away. Just food for thought. Worked for me. Here we go. Let's take a look at another stock that actually was, one of these news agencies was saying, okay, this is, a stock, not the stock du jour anymore, blah, blah, blah. It's I think they make some mechanical parts. They make a good business, NPO. So we came down and kind of rattled off these weekly unfair highs around 64.57. They're very bearish on this stock fundamentally. I love it because, we've kind of broken down on the daily a little bit, retested it, but come down in these weekly unfair highs. I think this is a pretty simple trade, actually. And I don't know a ton about this company, and I'm glad I don't, but 64.57, putting stops down below there, trying to get a kicker back up into the 72 range. This is this is like a good 15% move. Okay, and the reason I'm saying that is because technically it looks relatively sound to me. And if a lot of these folks are reading these articles and trying to look too deeply into some of these things, they get caught on the wrong side, they have to cover. Guess what? It goes up. Like the bearish articles sometimes. Here we go. Let's go back to the scanner. Let's do something kind of nifty here. And let's look at Alcoa. All right. Remember this? This is one we talked about last week. It's kind of showing its hand a little early. And as they say in North Carolina, viola. Here we go. 1285, new below unfair lows. And we talked about actually trying to get short this thing around 1350. Didn't quite get there. Got on the daily as high as 1343, 7 cents. Don't cry over spilt milk. What does that one mean? Somebody look that up, please. I cry over spilt milk anyway. I don't know if it has any deeper meaning, but when I see milk spilt, I generally cry. I love milk. 1327 was that new leverage point off the top. And as we gravitated down below, we got 1285 as the target it reached. But now we had to close below, and Alcoa was one of those stocks that was on the radar screen early. We were looking at, and we were talking about, I'm kind of beating this one to death a little bit here, trying to prove a point. Do you get involved in shorting stocks that are in the teens? Sometimes, yes, you do. And if the technicals are there, why wouldn't you? Seriously. So here we go. And as you can see, Apple, looking at the scanner, kind of directionless here across multiple time frames, all gray. Still gives you the inflection points. And here we go. Here's the multi-time frame view on Apple. Again, viola. Here we go. And a couple of the names we were looking at last week, I'm just going to pull up the doomsday list, because we're a little bit heavier on the short side now, remember. Got the breadth. Here we go. Below the box daily. Why is this not working? Wow. Yes, it is. And as you can see, a lot of stocks are trading below daily profiles, over 200 to be honest, or to be factful. You don't have to believe if I'm honest. These are These are facts. Texas Instruments, let's take a look at this because this is interesting. We're sitting at the bottom of a profile. We were trading above, and let's just take a gaze at Texas Instruments. We know the inflection points now. We just looked at them, and we know that the landscape view, the multiple time frame situation, here's where we're at. So big Texan, TXN. I hated this specialist too. Is equally as deranged as the IBM guy. Here we go. Here's Texan. 5606 poked its head below, got back above weekly on for highs. Okay, so now what do you do here? The close was right below, weekly on for or daily on for lows, excuse me. So what do you do with the stock like this? The scanner's saying, hey, we're at a leverage point, and that leverage point, by the way, is 5684, but we got this 5606 sitting here. I want to see this thing get clean and clear of this DMZ, and we're not really at that state yet. Now, I'm not exactly bullish on the market right now, so getting this thing opening up above profiles here and continuing the long-term heyday it's had, I might want to pass on that one. I think you've got better market conditions that you could start buying stocks in right now, and this is, in my opinion, not one of them. And that's based on the breadth being kind of flip-flopped right now. So we want to get some clarity and jump on the bandwagon on the right side when the numbers are in our favor. And right now, they're not really in our favor. And you can talk about uncertainty all day long till the cows come home. Another one, the cows come. The Greek situation, the Chinese, the race to zero, blah, blah, blah. You could talk about a lot of different unsettling situations that are experiments, but the fact of the matter is the market has plowed forward. We've been in a 6-year bull run that's been astronomical, and taking that for what it's worth, I think we might have some a little bit better market conditions. You could buy stocks in. This is not the ripest opportunity, in my opinion, even though it does show up as a relatively decent trade from the long side. So anyway, we also took a look at Walmart. I'm just going to pull that one up really quick just to do a little walk down memory lane. Talked about staying away from this from the long side, and why. This is why. And we kind of had a really evil, ugly close. Closed at 81.35 last week pre-market. As it stands right now, we're trading at 81.49. So not far off the mark here, a little directionless, and now getting below the daily profiles. So, we got into those weekly on for highs. We got back down below daily on for highs, or weekly on for lows, and got below daily on for highs, and now we're just drifting. I love this, and I love putting stops above 81.87. And I personally hate Walmart, but that has nothing to do with this. Technically speaking, this is a ripe opportunity on the short side, and I like the market helping this situation a lot. I gotta look into this. Is Walgreens Boots Alliance? That's not a division of Walgreens, is it? Anyway, let's take a look at Colgate Palmolive. This was an interesting stock to trade from the trading the listed stock arena back in the day. Here's Colgate. All right, so what we're looking at here is had a close last week, 68.75. Nothing looks dangerous here on this stock. And on the daily, you get some movement, not a lot of movement, but this is a situation. What do you do here? Just because we're trading below daily profiles here doesn't mean that you need to get on the short bandwagon with this. I think you actually are looking at this. Had some calls about this. This is why we're up here. So 67.66. I just think you got to wait and see on this one. Again, you might have some market relevance getting pulled down on this one. We want to look at JP Morgan. This is another one off the scanner, just showing weakness on the daily. I love it. I love this thing to go much lower, and that much lower will be 55.19. That's my target on this. We're trading 59.55. 55.19 is my target on JP Morgan. Stops above 60.96. And that to me is a risk reward, not to me, sheer mathematics. This will be a risk reward of risk $1.50 or so to make 4.5. You got to like those odds. Let's take a look at Time Warner again, TWC. A little update. Oh, nice. Here we go. Expensive stock, kind of finally had to break down here, 153.84, 150.01. We talked about that was the DMZ. We had to kind of like get through one way or the other. Stock could be in store for a little bit more of a pullback here. 136.74 would be the ultimate targets on that. And perusing down the list here. All right, some of these are just sheer ugly. We talked about State Street being relatively ugly last week or the week before. Union Pacific, we looked at that one too from the short side. It's still short. UPS we looked at. I think FedEx was on here too. Bank of America we looked at. So let's just pull up a couple of these. Let's just do a stroll down, seeing if we're right lane. Just made that up. State Street. Here we go. Okay, so here's the weekly on State Street, and we looked at this as, you know, a little bit of a confused situation. Talked about putting stops above 75.82 and then get back in if we could, revisit that trade or get down below. Still like this from the short side. Let's take a look at Union Pacific, UMP. All right. Okay. Yeah, we got a really good rally up into that 118.55 area. So what do you do with it now? We're trading 108.44. Pretty far in the hole here, but let's take a look. Had the weekly close below. This is pretty significant, I'll admit, on UMP. You want to catch these things in the first week of breakdowns because then the retest of those breakdown areas on the long term on the weeklies are very, very cool areas to use as battle points. And that battle point, as shown in the scanner, is 111.04. That's the bottom of the box, and we're trading 108 and some change right now. So as shown in the scanner, that's your next leverage point on the short side. You might have some market help here. You hope that we get a rally back up into that inflection point. It may or may not happen, but that's where you got to kind of sit tight and pick a battle. Let's take a look at Adobe Systems. Similar situation. Breakdown below the weeklies, the dailies, you know, we've kind of got decimated here quickly. You want to kind of a little bit of a rebound back into those weekly inflows. Those weekly inflows are about 1.5 points higher, 74.67, and that's the way I'm looking at Adobe. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Got the scanner up right now, and what I wanted to do was pull up some banking stocks since I'm so in love with them right now. And let's see here. Waiting for this thing to. There we go. Let me get rid of that. Let me pull up the XLF. And as that's populating, just want to show you. Man, connection. Everybody's okay. Here we go. So I'm going to take off the sort. Boom. And just have a natural state of XLF stocks. That can't be the XLF. What the heck happened? Here we go. Hold on. Okay, yeah, that previous sort had held it in there. Here we go. All right, so as you can see, a lot of daily reds here, and some weekly reds, and a lot in the XLF. I'm sorry, a lot of reds in the XLF. I had a brain fart there. Here we go. All right, so one of the things we were looking at, I was just looking at before the show, was Bank of America. Here we go. So sitting on the weekly unfair lows, and what do you do with this now? Do you say, okay, well, I got to buy this? 15.29. that's our weekly on for lows. We know that's a powerful situation. I'm looking at the XLF headed lower, and I think this particular stock could actually give it up pretty hard if that's the case. So here's Bank of America. We broke down with the daily 1610 unfair lows, and we're sitting on the weekly unfair lows. So I'm not actually looking at this as an attractive buy point here. You know, we may bounce, we may not bounce, but the good news is if we can wait and cross the border, you can put the stops above there, and any retest of that would be considered gifts. All right. Here's another one, dear to my heart. North Carolina stock, BB&T, started in Wilson, North Carolina, which is where I'm from. Moved their headquarters to Winston-Salem. Here we go, 38.86. This is another one. You got the retest the other day. Here we go. Here's the weekly situation. I like this one to head south a little bit, and you got that dual time frame situation. You got the 38.74 kind of co-aligned with 38.86. That's the weekly unfair highs, daily unfair lows. I like this to head south. I don't think it's a bad opportunity on the short side. And again, the scanner, you get all that information right here, BB&T. Sitting at the top, very close to that weekly unfair high. As you can see, I'll pull up the landscape view right there. Got below the dailies, getting below the weekly now. A little bit of a damage situation, so we can hopefully make some points off of it. All right, let's take a look at one more. Bank of New York Mellon, BK. This is one where we've got all grays across the board. So as we see all grays across the board, you don't have a lot of leverage. Here's the situation here. Nothing to really key off of except maybe waiting for a breach of 39.14 to head lower. Here's the weekly situation, but the scanner again told us all this already. This is looks a lot stronger than some other bank stocks. I'd stay away from this on the short side. Guys, you've been a great audience today. Steve Rhodes is next. He picked 3 out of the 4 final 4 candidates. Hooray. I did not. Steve's better than me at picking basketball games. That's what we gather out of that. Guys, you've been great. Steve's next. Be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.